Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on Muneeb from Stacks. Muneeb, welcome to the podcast.
Thanks for having me.
Of course. So I want to hear more about your origin story. Tell us how you originally got into Bitcoin.
All right, that would take me all the way back to my grad school. I was doing a PhD in distributed systems, and I was about to actually finish my thesis. So it was 2013 was the year I was supposed to graduate, and with my co-founder Ryan Shea back in the day, I put my thesis on kind of like pause, and we were trying to try out a bunch of startup ideas and stumbled upon Bitcoin. And I thought that I'm taking 1 year leave from my PhD program and just trying to build something in the startup world, and that turned into effectively a 10-year journey so far, right? So discovered the rabbit hole of Bitcoin, and has just been going deep and deep since then. And surprisingly, actually went back to grad school roughly in 2017 to finish a thesis that was about building on Bitcoin and how can you have these smart contract layers and applications that use Bitcoin as a base layer, right? So I ended up doing the thesis, but it's a completely different thesis, right? I had to throw away all of my earlier research from 2013. That's been my journey. Bitcoin was $80-$90 back then. Whenever it would go above 100, I would think it's too expensive, and I wouldn't buy.
Very cool. I'm curious, what was your original thesis back in 2013?
It now looks honestly so boring looking back at that. It was trying to make data centers more efficient and basically doing more incremental work in cloud computing effectively.
In between your two theses, were you mainly just working on startups, or did you have any full-time jobs in between that?
No, so I think we were kind of hacking for free for a bit, me and Ryan, and then we raised a little bit of seed capital, trying to build Bitcoin applications, right? So I don't know if some of the real OG people, they would remember us from the One Name app. It was kind of a about me. You had your profile picture, some basic kind of profile data, and it was stored on the Bitcoin chain, right? So you could get a name. So I had Muneeb.id. That predates ENS, right? This was built on Bitcoin. You could get a human readable name along with the profile. And I think around 2015 or so, it was one of the largest applications sending transactions on the Bitcoin main chain, right? To the extent that some of the Bitcoin core developers were yelling at us that we are trying to scale Bitcoin for payments, and you guys are building these different use cases that is just sending junk garbage data on the main Bitcoin chain, and kind of adding to our problems of scalability. And I think a lot of our experiences building applications like OneName directly on the Bitcoin layer actually informed the design of Stacks, which roughly started in 2017 after my thesis.
Nice. Yeah, so I definitely know you're working on Stacks now. Can you tell us a little bit more about that? What's it all about?
Yes, I think the main kind of thesis or design that we follow is that Bitcoin's base layer is simple, it's durable, it's not going to change. Bitcoin is money, right? And let's contrast that to something like Ethereum, where the base layer is actually much more complex. It has smart contracts. It has all sorts of kind of features and functionality. And some of those things are interesting to developers, right? They want to use these smart contracts. They want to build, let's call it decentralized exchanges like AMMs or NFT marketplaces, whatever the developers want to build, right? So the argument on the Bitcoin side is that it's a really nice property that Bitcoin is simple and it doesn't change, and people can kind of treat it as a durable base layer. But then you can build other types of features and applications as Bitcoin layers. So I think Lightning is a great example of a Bitcoin layer. It is mostly targeted towards faster, cheaper payments of Bitcoin. So Lightning itself is actually not that complicated in a way, right? It doesn't have smart contracts, doesn't have a lot of other things. It doesn't have a global ledger. It's just made for faster, cheaper payments. And people move their BTC into Lightning, make the payments, and then take the BTC out. So Stacks is a Bitcoin layer that has smart contracts. So it has a ledger It has a ledger separate from Bitcoin, which is very important. Going back to the Bitcoin core developers yelling at us for building an app that is resulting in a lot of transactions on Bitcoin, people don't want that, right? So with a separate ledger, you're not impacting the Bitcoin state. You're not putting junk garbage data that from a Bitcoin perspective, this data is not needed, right? So you have a separate ledger where you can store that data, and this smart contract layer can evolve independently of Bitcoin. So you can, Bitcoin requires like a much higher bar to when a new feature or change is introduced at Bitcoin. But Bitcoin layers can upgrade much faster, right? Like they're more experimental. So developers who want to build these applications can actually do that on Bitcoin layers, and these Bitcoin layers are then settling data on Bitcoin itself. So you can do thousands of transactions on Stacks, or you're using all sorts of applications on Stacks, but the data is eventually settling on Bitcoin, and that's a very nice property to have.
I definitely agree that it makes a lot of sense to, at least whether you're building on Bitcoin or at least building some sort of second layer, that's kind of based off of Bitcoin, rather than building on something like Ethereum or Solana that can just get changed, overnight by a small group of people. I think that makes a lot of sense. So do you think something like Stacks will replace Ethereum, or are they in competition with each other?
Yeah, so I think first of all, there are a bunch of Bitcoin layers. I take a very broad definition of a Bitcoin layer. So something like RSK, in my view, is a Bitcoin layer, right? You can peg in your Bitcoin. It also has a separate ledger. Even systems like Liquid, it is more federated, but you can think of that as a Bitcoin layer as well, right? So the general kind of design that I have in mind is, if you look at the internet, TCP/IP was very, very simple, right? It doesn't change that much either. And then people were able to build other things on top of it, like HTTP or other types of functionality that uses TCP/IP, right? So our thesis is that Bitcoin itself is a very, very valuable money layer and a settlement layer, right? And right now, I think it's used more as money, mostly for store of value, right? But it's not used that much for as a settlement layer. And I think it will be used more and more as a settlement layer looking into the future, because if you look at systems like Ethereum and Solana and so on, they do have to introduce a cryptocurrency, right? That's kind of like the base currency of that ecosystem. People are doing trading against that currency, or they have to kind of secure the base ledger and data in their blockchains as well. So I do think that settling data on Bitcoin gives you much better security guarantees that something that's written to Bitcoin is going to be around for decades from now, right? It's like a neutral playing ground. Anyone can settle data on Bitcoin and then just agree that, yes, this is exactly what happened. And it's not like someone can come back and just change the history. So if you have a much more centralized system, people cannot be sure that a handful of actors can't just come together and just change the history of what happened on that system, right? So you get that really nice property from Bitcoin. And more importantly, Bitcoin is the largest capital base, right? It's the highest market cap project. There's a ton of capital in BTC that's basically available. And I do think that right now we're at a place in the industry where there are relatively less developers building and doing useful things with BTC versus some of the other ecosystems. And that is something that we're trying to change, because I think Bitcoin benefits as more and more developers come in and they're trying to do interesting things with Bitcoin, because the model on Bitcoin, I think it's worth kind of talking a little bit about why that is happening. That because you can't really have smart contracts on Bitcoin, you can't directly build applications due to scalability and all of these things at the Bitcoin base layer. There are more technical challenges to kind of peg in your Bitcoin from the main chain into a Bitcoin layer, and then use that Bitcoin in that layer and then bring it back. And there have been several solutions, like RSK has kind of their own hardware-based federated type of a solution. The Stacks Bitcoin layer is working on kind of their version of what a Bitcoin peg in and peg out looks like. But I think once this infrastructure matures more, it makes a ton of sense for people where your long-term savings and holdings are kind of living on the Bitcoin main layer. But whatever capital you want to deploy into applications, or your more experimental play around money, could actually move into these Bitcoin layers, and people can do trading, people can play around with NFTs, whatever they want to do. And that type of economy is at a very early stage for Bitcoin right now. But in the long term, I am very, very bullish on Bitcoin layers. And I think once done right, a lot of people would want to do things in Bitcoin versus going to some of these smaller ecosystems. And that's kind of like the core thesis that we have.
No, I mean, I think that makes a lot of sense. The Bitcoin base layer is, extremely stable. It's very predictable. Its supply schedule is immutable. The consensus rules can't be changed very easily. So I definitely think layers are how it's going to be built out. I guess personally, I'm not quite sure of which layers are going to be the ones that, end up getting picked or getting utilized the most. I'm curious to get your thoughts on what do you think are the most important DeFi apps that could theoretically be built on Bitcoin or already are built on Bitcoin? And why wouldn't, because a lot of Bitcoiners, I guess, and even myself somewhat, push back on I think a lot of the traditional DeFi type stuff is Ponzi, nonsense, yield farming. But I'm curious to know, what are your thoughts? What's some real use cases that excite you?
Yeah, I think there are some. By the way, first I agree that a bunch of the DeFi stuff could be really crazy and people doing all sorts of things. That kind of comes with having this attitude of experimentation and letting people do whatever they want to do, right? And let the markets kind of weed that out. But in terms of the applications that excite me, or I've seen a bunch of Bitcoiners get very, very excited about that as well. I think the first one would be stablecoins, right? In the sense that there's this application that a lot of my Bitcoin friends really want, which is that can I put BTC into a secure smart contract, right? Whereas it's not the Turing complete Solidity style contract, but something that is more secure, where you can have formal proofs over the security properties of that smart contract. So can I put my Bitcoin into a smart contract versus giving it to a company and draw a stablecoin loan against it, right? So as a Bitcoiner, we don't want to sell our Bitcoin, right? A lot of people are in that same boat, but it would be nice to get some liquidity option, right? I don't care about how much collateral do I have to put in based on price swings. I can put 300% collateral, 400% collateral, and take some stablecoin loan out, and I'm happy paying back that loan instead of selling my Bitcoin and getting a tax hit on that. So I think that's a very real application that a lot of Bitcoiners are interested in. Right now, they don't do it because realistically in the industry, you either have to give your Bitcoin to a company, and then that company can go under, as we saw, companies go bankrupt, or they have to have some sort of a custodial trusted peg to a system like Ethereum, and then try to use that application on Ethereum, which a lot of people in Bitcoin, due to various reasons, they don't feel comfortable with that software stack or those programming languages and so on, right? So right now the market is basically that Bitcoiners would rather not do anything with their money than put it in, give it to a custodial for an application like this. So I think that's one. Another one is if you look at where Bitcoin gets traded these days, it's mostly large centralized exchanges like Bitcoin, like Coinbase or Binance. Whereas if you look on Ethereum, these AMM like exchanges like Uniswap now have some of the deepest liquidity pools for ETH. And as a person who really likes decentralization, I think we have to admit that it is a better user experience and better for from a decentralization perspective for the user to actually have ownership of their own funds. So if you have ETH in your own wallet on MetaMask, and you can actually trade it against a stable coin or whatever swap you want to make, and then trade back anything that you want to do, that is a more decentralized way of doing things than moving your money to Binance or Coinbase. And a lot of Bitcoiners would, tweet about, hey, move your coins off of exchanges, and I completely agree with it. But at the same time, there need to be real decentralized exchanges that Bitcoiners could use, right? So I think Bitcoin layers can really help with that, where if there are more trustless peg solutions available, you can have decentralized wallets where you have custody of your BTC. But if you want to swap it against a stable coin, or just you want to trade it and then trade back into BTC, you could do that in a decentralized way. versus relying on centralized exchanges, again, which could get hacked, which could go under, they could go bankrupt, and there's that risk factor. So I think those are some of the applications that have like much clear market need already established, like billions of dollars of BTC already trades on a daily basis on centralized exchanges. And I think that can be done in a decentralized way. And there's already market data from Ethereum and other systems that proves that, you know, some of these applications could be pretty useful and a lot of users want to use it.
Yeah, I mean, I pretty much fully agree that, you know, the idea of building a decentralized exchange, or the idea of at least creating this, you know, Bitcoin over collateralized stablecoin, all decentralized, is like super interesting. I guess just still so early that, you know, a lot of people don't, like you said, don't trust it, or, you know, with all these various side chains or whatnot. I'm curious, have you heard of Sovereign Zero product or Zero protocol built on RSK or rootstock? And do you have any thoughts on that?
Yeah, I think it's a great effort. I'm friends with Yago, and he has kept me updated on some of the great work that is happening. And I think one of the kind of like views that I have is, if you're a Bitcoiner, then it's like, you know, you don't care about which Bitcoin layer takes off, right? Because it's good for your Bitcoin. It's good for the Bitcoin ecosystem. So I very much encourage, and there already exists like a lot of this feeling in people working on various Bitcoin layers, that we can help each other, right? So similar to how I'm pretty close with Yago, he keeps me updated, we exchange ideas, and we are kind of like excited about similar things. I do think there needs to be this like more shared sense of success, that, you know, Bitcoin layers are good for Bitcoin. Like, you know, they if some of them take off or a bunch of them take off, like that's, as a Bitcoiner, like you are, if anything, the more experiments there are as Bitcoin layers, the more it gets de-risked, because people are trying out different things. It's good for decentralization. It's good that different designs are being explored. And then the market will decide, and people would learn through trial and error that which things work better than the others, right? So we should always be encouraging experimentation. We should always be encouraging more developers coming in, because we also have to realize, I think this is a thing that sometimes I get into these discussions where outside of the Bitcoin community, a lot of the people would, and I think rightly so, would criticize that the total number of developers or startups that are really building in the Bitcoin ecosystem is relatively much smaller to the rest of the industry, right? And I think that is something to think more about, that at the end of the day, Bitcoin is an open source project. You need a lot of developers to come in and use Bitcoin, build like a Bitcoin economy, have a lot of applications built. And there's already that first challenge, because full smart contracts don't exist at the Bitcoin base layer, or you have to build these separate Bitcoin layers to do more kind of like, you know, new experimental things. First, that infrastructure needs to mature, which is not the case with Ethereum. Yes, Ethereum is building Ethereum layers as well, but developers could already build like fairly advanced applications directly on the Ethereum main chain, right? So on the Bitcoin side, people who are deciding to build here, they're already kind of like doing additional work to build the Bitcoin layers, and then developers are coming and building the applications and so on. And that market, I think it's okay to admit that it's relatively small right now, but these people are very enthusiastic, and I think they believe they're true like mission-driven folks. And I think like in the coming years, I'm at least personally very bullish that market is going to grow a lot, because the Bitcoin's properties are fundamental, right? Like, and a lot of people realize that Bitcoin is here to stay, and some of the technical challenges and better developer tooling and things like that, it can be achieved, right? It's a solvable engineering thing, and people can do it.
Yeah, I mean, I think that makes a lot of sense. One thing that, like, because I Sovereign Zero protocol, and if that was built on Stacks, similar product, I think that would interest me. I haven't done, Sovereign Zero protocol, mainly because I guess I haven't trusted, like the smart contract code for that protocol specifically, but also being able to just peg in your Bitcoin and then peg it out via the sidechain. Obviously, like we talked about at the beginning, Bitcoin's base layer is the most least uncertain, the most trustless, blockchain there is. And then once you introduce these sidechains, that's a whole another level of risk. I'm curious to know, what are the trade-offs between base layer Bitcoin and something like Stacks? What are the risks that you're taking on?
Yes. So I think in terms of design, I would say with the various Bitcoin layers, let's compare Lightning, Stacks, RSK, and Liquid. Lightning clearly stands out because over there you have cryptographic guarantee that I could just sign a transaction, broadcast it on Bitcoin, and I can take my money out of Lightning, right? So I think Lightning, I would say, would be the most secure in that sense, where you have a strong cryptographic guarantee that I could at any time just sign a transaction and get my money back, right? So that's that. I would call it the gold standard, right? Like the Lightning becomes kind of like the gold standard. And then the RSK system, I think it basically has a federation of hardware wallets, right? So you're kind of like trusting this federation of hardware wallets that the Bitcoin is actually going into their possession, and they're issuing the Bitcoin derivative asset RBTC on the RSK chain, and then you can do a peg out. So the trust is basically in this layer of it's almost like a federation and a hardware wallet. And yes, there are kind of like more bells and whistles attached. People can kind of like read the RSK documentation for exactly how the system works. But at a high level, that's what it is, right? And in terms of Liquid, I would say RSK is, in my mind, sort of a federation model, but Liquid is even more federated than RSK, right? So there aren't these hardware wallets involved or these the set of people who control those hardware wallets, but the federation members, and I believe Blockstream plays a large role there. So you're kind of like trusting the company or that company plus like some other members to do the peg in and peg out. So these systems are pretty far away from the dream idea of like there could be a trustless peg, right? Like you're not trusting anyone in the middle, and you can do that. So the work that's happening on the stack side, the system that's live today is called XBDC. That's actually flat out custodial. It's very similar to WBDC. Just like WBDC on Ethereum, there's a custodian in the middle. XBDC is a custodian solution with anchorage. But the peg in and out system that people are working on right now is a economically secured system where effectively think of like a decentralized set of people who are economically incentivized to sign the peg out transactions because they stand to lose more money if they don't sign the peg out. Right? That's roughly kind of like the direction that the Stacks community is heading in. And I think that's an interesting addition to the design space, that do you want to trust a federation or do you want to trust kind of like this more dynamic group of people who at least have an economic incentive to sign this? And I would say the cryptographic security that Lightning has would always kind of like remain the best form of it, right?
Yeah, I mean, I think you made a lot of good points. I'm very active on Lightning. I have my own Lightning node. I've got like 20 channels or whatever opened up, and I trust Lightning. Like I understand that there's definitely more risk than holding base layer Bitcoin, but I actually use Lightning. I have actual money on Lightning, not much money, but some money, and I don't have any money on Liquid. I don't have money on RSK, and I also don't have money on Stacks. So I think it's going to get better, and I hope it does, and it becomes more trustless, and maybe like 2 years out, 5 years out, RSK or Stacks gets fully implemented, and it doesn't break, and then I think people might start to trust it. But yeah, I think it's like getting to a certain point, and then getting over that hurdle to where like Bitcoiners feel comfortable putting their Bitcoin on a side chain. Is there any I know I was talking to Eden Yago, who's the founder of Sovereign, on a podcast a few weeks ago, and he was talking about potential changes to Bitcoin, like Bitcoin Core, that could be implemented as soft forks that might make these side chains more trustless. Do you have any things you would want to eventually see Bitcoin Core implement that would make either Stacks better or RSK better or any sort of side chain to where as a normal Bitcoiner I could have more trust like I do in Lightning? Yeah,
I think in general, when we are building kind of these Bitcoin layers or side chains, whatever name people prefer, my thinking is usually that we don't expect changes from Bitcoin, right? Because Bitcoin is going to change very, very slowly, and whatever change occurs, then you can think about how to include that. Like, for example, Taproot took a while to go live, but once it went live, very quickly the Stacks layer is now including Taproot type support in the next upgrade. Right? So that's one model where we don't try to rely on Bitcoin changes. But if you could have a wish list that 3 years from now, 5 years from now, what are the type of things Bitcoin Core should introduce? A thing that would be very high on my list would be Merkle proof checking, meaning that someone can produce some data that is saying that, hey, I have a piece of information, but the proof of that could be done at the Bitcoin base layer, right? And these things are actually, they don't take that much data and space either, and they're not very computationally intensive, meaning that you're not doing very intensive calculations at the Bitcoin layer. But just having basic Merkle proof checking could actually enhance the design space of what's possible on these Bitcoin layers, and you're using more of Bitcoin security to actually check the data that maybe otherwise exists on the sidechain.
Yeah, no, I think that makes a lot of sense. And yeah, it's just going to take time and change. Some changes might be made, and maybe there won't be changes. But that's why I think at the end of the day, a lot of Bitcoiners, I guess, might push back on a lot of this and say hey, Bitcoin works as it is. It doesn't need changes. It doesn't even really need sidechain. Yes, it would be cool to be able to trade Bitcoin versus dollars in a decentralized way, and maybe one day we need that if there's very authoritarian governments. But at the end of the day, I think many Bitcoiners would say if Bitcoin became hardened today, it would still be fairly successful. Would you agree with that, or would you disagree?
I think if you look at the market data, the adoption of Bitcoin as money in the real world is far ahead of anything else, right? If you want to go and buy coffee with Lightning or Bitcoin, or even in certain parts of the world, go to a McDonald's and have a meal and then pay in Lightning. I don't think anything else comes close. Or if you look at institutional adoption of Bitcoin as money, so I consider those real world adoption of Bitcoin as money, and I think Bitcoin is clearly winning that battle. The thing that I'm more concerned about is the use of Bitcoin as internet money, right? And without getting into hey, how useful are these applications or not, just looking at the fact that users are doing it, right? There are millions of users who want to trade, JPEGs online, but they're doing it currently with ETH as money, right? Their default, they think of okay, I'm going to make this trade. I'm trading these NFTs, but they're doing that with ETH. Or people who are doing trades on decentralized exchanges or using stable coins, and they're putting some collateral. So those use cases, in my mind, are used as internet money. There's no physical good attached on the other side. A JPEG is a purely digital good. And I think on those cases, I don't think Bitcoin right now, at least, is being used as internet money. And that's the area where I think where a lot of these Bitcoin layers basically want to work in, right? I don't think they're helping the use of Bitcoin's use as money in the real world. They're mostly targeting these online use cases, online-only use cases. For example, Open Bazaar was an application where you could pay with Bitcoin for a physical good. I don't think a lot of developers are building things like that on these systems, but they're building things like an NFT marketplace. It's a purely digital thing. It's internet money, and that's the area where I think right now, if you're being very frank and honest, I think Bitcoin is not the dominant form of internet money.
Yeah, I think that's fair. I mean, I think me and others would push back to some extent and be hey, I personally don't really care about NFTs. I don't know if the market for NFTs is going to be massive 10 years from now. I think the way the economic system works today is everyone's, or at least last year, everyone's incentivized to just gamble on speculative tokens, meme stocks, monkey JPEGs, and now it's maybe they shouldn't be gambling on monkey JPEGs. But yeah, I think you make a good point. If there are native internet decentralized tokens, I think a great example of what we talked about earlier was a Bitcoin over collateralized stable coin, to where you have the dollar, but the dollar is not connected in any way really to the traditional banking system. I think something like that, and being able to trade that between Bitcoin and dollars, would be potentially very valuable.
Yeah, I think the one way to think about this is that even from the early days in Bitcoin, people have been talking about building a circular Bitcoin economy. So that can happen both in the real world, meaning let's say there's a local town and a lot of people start accepting Bitcoin, or you're buying coffee with Lightning, people are keeping their savings in Bitcoin, and trades are happening in Bitcoin, right? So you're trying to build a circular economy at the local level. And then something similar can happen at the internet level, where people are doing whatever that they want to do, right? And they would, what are they using as money on the internet for various applications? Because that's how users get onboarded, right? So the part of me that I get concerned about is that the next generation or the new people who are going to discover, the Bitcoin and the rest of the crypto industry, like if they're getting onboarded with something else other than Bitcoin as their first currency, and then they start using it, then they're missing out on the best asset, right? And that's where the more useful we can make Bitcoin, the more, if we can onboard hundreds of millions of users of people to Bitcoin, right? Like that is really, really good for the Bitcoin economy. So it's the where the developers are going and the users are going. Like that's the thing that at least I spend a lot of time thinking, because most of my work is related to use as internet money. And I think we have to see what the industry is doing, right? What the users are doing and what the developers are doing.
Yeah, I think the point that you made on like the circular economy, I think that's fairly interesting, right? Because in a way, like privacy is the way most people accumulate Bitcoin now is through an exchange where they're KYC, government knows, and the corporations know everything about them. But I guess if you're potentially on like a decentralized exchange built on Bitcoin, you're trading this dollar stable coin, which is not even connected to the banking system, and you have your Bitcoin and it's all going back and forth. It kind of like jumbles up people's UTXOs in a way. So yeah, I think that is, potentially like another interesting pro of being able to build things on top of Bitcoin or top of
that reminds me of another application that I think is very, very important, which is privacy features. So right now for Bitcoin, you can do things like coin join or other types of ways to get some level of privacy. But if you look at a solution like Tornado Cash that did get a lot of usage and it's based on ZK, it's not possible to implement that at the Bitcoin base layer, but it is possible to implement that at Bitcoin layers, right? Layers like RSK or Stacks. And then the UX becomes like you're going from BTC into RBTC or SBTC or whatever you want to call it, and you're deploying that into the privacy smart contract, and you're kind of like getting the fresh new coins out and then pegging them out back to BTC, right? So from a privacy perspective, and again, you don't have to risk a lot of your Bitcoin balance to do that, right? Like you can do tiny amounts at a time. But from a privacy solution perspective, like that's clearly a superior solution to some of the techniques that exist today, but it can't be implemented on Bitcoin's base layer, right? So I think that's a very, very, very important application that hopefully it is important to a lot of Bitcoiners, that I could actually just take my BTC and pass them through some sort of a privacy solution to get newly kind of like, clean, fresh minted Bitcoin that are not linked with the history of the previous BTC that you had.
Yeah, I think that's a good point. A couple of questions that are a little more interesting or you may not like, but I have to ask them. Why does Stacks need a token?
Yeah, so I think I get that question a lot. It's very, very important. So the base thing there is that Stacks has a separate ledger from Bitcoin. And this comes from, again, the earlier application that I talked about when we were building the OneName app directly on Bitcoin. We had to store a lot of this additional data on the Bitcoin ledger, and nobody likes that. The core developers didn't like it. People don't want non-transactional data, which is actually an order of magnitude larger than Bitcoin's data. So you need to store that data somewhere, right? So for certain use cases, like for example, Lightning does not have a global ledger. And then there are certain types of applications you can build with Lightning, right? Like there's no state, there's no kind of like global ledger attached with Lightning. RSK has a global ledger, Liquid has a global ledger, and Stacks has a global ledger. And all these three systems have picked different trade-offs. Liquid says that we're not going to introduce any token, but it's sort of centralized, right? Like it is controlled by a federation, and they are the miners on the system. They control the ledger. The federation basically decides whatever is the history on the ledger, right? Some people are fine with that. Some people are like, sure, I will trust this group of companies. But there are other people who are like, I don't want to trust anybody, right? I want to have a decentralized global ledger, and to have a decentralized global ledger, just like Bitcoin needs incentives for miners to secure Bitcoin's global ledger, or Ethereum miners need incentives for Ethereum miners to secure the Ethereum ledger. When you're introducing the global ledger at the Stacks layer, you need the incentives to actually secure that global ledger. So I think that's the first aspect of it, which is live today, and Stacks is a fully decentralized layer, right? Again, I'm not saying that federations shouldn't exist. I think people who are comfortable with federations, they can go and use systems like Liquid. It's great that option is already available, but there are many developers and people who feel more comfortable with a kind of like an open permissionless system, and that's what they want to use, right? So for that, you kind of like need the incentives to secure the system. The second interesting property is what the work that's ongoing, which is that we're working on an economically incentivized Bitcoin peg. So almost by a definition of it, there needs to be some asset or collateral on the other side of the peg that is giving the economic security for why are people signing the peg out transactions. And again, there are similar problems because the way Liquid solves this problem is, again, you trust the federation, right? So you're trusting the same companies to not only secure the global ledger, but also to sign the peg out transactions. And some people might be fine with it. They're like, I trust Blockstream, I trust the friends of Blockstream, they will always sign my peg out transaction. But if you want a more decentralized system, which that has an economic peg, where there is a decentralized group of parties that are doing the signature, you need some asset to begin with on the other side, because that's how Bitcoin is appearing for the first time on the Bitcoin layer. So I think those are the two main reasons why the Stacks token exists. And I would also clarify that it's not trying to be money, right? That token is not trying to compete with Bitcoin, because the Stacks layer cannot exist without Bitcoin, right? So it is trying to help grow the Bitcoin economy, and it plays a very kind of like much more limited role to incentivize securing the ledger and the ongoing work of actually securing the peg.
Yeah, I thought the point that you made at the beginning was pretty interesting about how you didn't want to store extra data on the base layer of Bitcoin. I think that makes a lot of sense. And I think even if developers are mad at you, or you're slightly raising transaction fees or whatever, you're just adding a bunch of junk to the blockchain. I think eventually also, if Bitcoin really does become money and becomes this final settlement later, you're probably going to get priced out of being able to add data to the blockchain. So it's not just like not make people upset. I would say it's more to like, hey, like that's not sustainable. Like you're eventually just going to have to build it somewhere else.
You're making an excellent point, right? So this is where Stacks started in 2017. That our initial applications, when the 2017 bull market happened, it wasn't just about the additional data, but the transaction fees went to like $50, $60. I'm just trying to, a user is just trying to register like a username with some profile data. They're not going to pay $50 to register that at the blockchain layer, right? So that was the point where it became really clear to people who were working on the project that you need a separate layer, right? Like it has to be a separate ledger because the Bitcoin ledger is going to be so valuable and so kind of like demand for block space that you would be priced out. Like these types of applications would just simply be priced out. So I think you are making a great point there.
Yeah, and if I heard you correctly earlier, you basically said Stacks is like still in its early stages, and eventually you're going to have this economically incentivized blockchain or sidechain or whatever you want to call it. When will that be like in full implementation, or do you have a date or like an idea?
It's ongoing work. I've kind of like I would say the core design is maybe 80% of the way, and Stacks has historically been doing kind of like one major upgrade every 6 months to a year, right? And I think this one is going to take out, my guess would be at least 9 months or more because it's a fairly kind of like big upgrade to the core system, and it's a pretty decentralized ecosystem as well, right? Like it's really modeled after Bitcoin, right? Like it's not a proof of stake system. It allows kind of like some of the similar properties that the Bitcoin's consensus mechanism allows for. It's very much modeled after how Bitcoin works, but it's a separate layer that benefits in certain ways from the security of Bitcoin as well. That's another thing that we are potentially working on. Like how can we make the separate layer of Stacks secured by 100% of the hash power of Bitcoin, right? Like that would make a lot of people feel good as well. That hey, this layer, yes, it's a Bitcoin layer, but actually 100% of Bitcoin's hash power is securing it. And I think that would be a pretty interesting thing that we're currently working on. It's R&D stages.
Yeah, that's fair. What would you say to the segment of Bitcoiners that just say, hey, Stacks, the token is just an affinity scam? Like you're going up to Bitcoiners, you're saying like, hey, like we're building on Bitcoin, buy my token. What would you say to them?
I think the first thing I would say is like nobody really says buy my token, right? Like if you look at even some of the folks here, they're not trying to sell you anything, right? Like it's a very developer focused type of a community. And I think the only place where these people interact is probably Twitter, right? Like a lot of the developers, they're just building stuff, and the communities that they hang out in, not a lot of these critics actually even interact there. Like if you go to the hackathons where people are building stuff, if you go to the Discord channels where developers hang out, or on GitHub, like the critics and the developers, they don't even get to mingle that much, right? Like developers are kind of like doing their own thing. And Twitter is probably the only place where you would see some of that interaction. And I would just say that the devil is always in the details, right? Like because are developers coming to Stacks? The answer is yes. And these people could have gone anywhere, right? So the fact that these people are excited about a Bitcoin layer and they want to come and do interesting things with BTC, right? So the question becomes, is it better for a developer to go and build let's say a Uniswap-like application on Ethereum or Solana or somewhere else, versus coming to a Bitcoin layer and trying to do something interesting with BTC, right? Like you're kind of like using Bitcoin. I would say that's a positive thing for the Bitcoin economy, and similarly, having more developers. I think there was a very interesting survey where people were measuring like how many active developers are there in either Bitcoin or the Bitcoin layers, and I think Lightning and Stacks are probably the two biggest layers around Bitcoin that have real developer traction. So I would say that the criticism would be like if someone is actually running a scam, right? Like if someone is like trying to fool people or do anything like that. This project actually did a SEC qualified offering, meaning that the offering was fully kind of like legal in the U.S. It basically is held at the same level of accountability and transparency as any stock that trades publicly in the U.S. Like that's what a SEC qualified offering means. So people who wanted to participate, they had all information disclosed to them. Is a perfectly legal thing to do in the U.S. And that's how the project started. And people are building, right? Like they're not chilling. They're not trying to kind of like sell people anything. They're mostly a group of developers who are just building interesting applications.
Yeah. So is Stacks like an actual like security, quote unquote, like a legal security, or
we did a lot of work there, right? So the offering complied with the SEC's regulations, and even in the offering, it basically said that if the system is decentralized enough, then it doesn't need to comply to the security regulations. And then the question always becomes: this is what the hard thing is, that how will the SEC determine that if something is decentralized enough, right? From our side, we gave a legal framework, like it's public, it's from a very reputed law firm, Wilson Sonsini, that worked on basically when the Stacks layer mainnet happened, the ecosystem basically decentralized, right? Like there are independent companies, close to maybe 50 of them, that work in the ecosystem, a lot of the early team members, even like they're not even at a single company, right? Like the people who were kind of like working on the project before it launched, they're not even in a single company. And same with the token distribution, like there's no single individual or company that has anywhere close to double-digit supply of the token. It's very decentralized. Like many different people have access to the original distribution. So and the miners are independent, right? Independent set of miners came in. Some of the early people or folks who developed the code base, they don't even mine on the network. There's a set of independent miners that do it. So unlike some of the other projects out there has been a very huge focus on decentralization, even as a Bitcoin layer, right? And then I'm not a lawyer, I'm not a regulator. I think the question is always, what are the regulators going to think? That is this system decentralized enough or not? But one thing I can say for certain is that nobody can say that the token offering was illegal, right? The token offering was fully compliant with the US regulations. And then the system, when it launched, is as decentralized as people could have made it, right? And there's a legal framework that people can read about, how lawyers would argue that this is actually decentralized enough. But I don't think you're going to get any clear answers from regulators on that.
So basically, like your position right now is like Stacks is not a security, but you've done everything properly that if for some reason the SEC does just decide to crack down on all of this stuff in the whole crypto space, that Stacks would still be all right and you would be okay.
Exactly. I think it's basically like the legal position is the framework that we put out, that when the independent miners came in and launched the network, after that there's no company there's no company that people are relying on, right? Because the ecosystem decentralized, people just went off, did their own thing. It's like saying that if it's a security, what is a security of? Which company is there that people are relying on with the expectation of profit, right? So if there is no company and it's a decentralized ecosystem and it's kind of like working, right? And that was a huge risk, frankly. Like you're kind of like saying that that there is no single company that is going to come in and ensure that mining is happening, that people are building and doing all those things, right? Which a lot of these projects do. Like there's usually one big company that is really responsible for everything, right? We, being Bitcoiners, believe a lot more in decentralization. So we took the risk of like running it as a decentralized project, that let organically independent companies come and developers come and come and build here, right? So that's the stance, that the offering was done under securities regulations. And after mainnet launch, we think it's decentralized. If somebody thinks it's not decentralized, then they should come and basically prove that it's not decentralized enough, or what regulation should we be following. But we have done our best to follow the law as much and above and beyond like I think anybody would have done.
Yeah, I mean, it's so interesting how this space since like 2017 has really just blurred the lines between like what is actually a security and what is a security. Because I would say most Bitcoiners will say, even post hyper Bitcoinization, if that ever happens, they would say like, hey, there's still going to be like investments, there's still going to be securities, there's still going to be equities. But then these, new tokens have kind of, I'm not saying Stacks particularly, but other tokens like maybe very clear securities, and like they're raising money and they have a huge organization that's trying to basically help their investors profit off investing in their coin. And then there's some that are like actually like very like on the border. It's like, wait, is this actually security or is this not a security? And it's very difficult to actually draw the real line. But yeah, it's an interesting thing. Last question, then we'll wrap this up. You talked about this a little bit earlier, but I saw you took a 2-week hiatus from Twitter. Why did you do that?
I think like it's basically there was some family stuff going on. I wanted to spend a bit more time with my family, but I'm not fully back. Like I think I enjoyed like the break so much that especially I think like there are these echo chambers that get created, and there's a lot of like, especially these days, especially in the Bitcoin community, I think there is the people that I would consider more on the extreme end of the spectrum. There's a constantly debate happening between that side and people who might be more open to new applications, new kind of like Bitcoin layers, new types of kind of like people entering the Bitcoin economy. And I frankly just wanted to take a break from that, because I think the Twitter discussions are not going to decide anything. at the end, the market decides, right? Like at the end, developers and users are going to end up deciding what systems get used and what systems don't get used. So if there are like a ton of users that come in and they're using a Bitcoin layer, then over time that thing is going to be useful and valuable, right? And then it doesn't matter like if people criticize it or not, because it ended up being successful from a market perspective. So I think a lot of people in the Bitcoin community do believe in free markets. So I've been just spending more time, especially like these intellectually rich, deeper R&D challenges. This is kind of like, my background. I'm an engineer, I'm a computer scientist. So I've just been a lot happier disconnecting from Twitter and just spending more time with the developers working on the actual technology.
Yeah, I think that's a great spot to wrap it up at. I mean, I think this is a good conversation. I think it was a balanced conversation between me, very Bitcoin focused, and you building Stacks. I personally don't own Stacks. I probably won't buy it, but I do support, building different layers on Bitcoin, and I think, that's a noble pursuit. But thanks for coming on the podcast. Hope you enjoyed it. And is there anywhere you want to send listeners after this?
No, thanks a lot. This was great. I think these are the kind of healthy debates we should be having more of in the community. And in terms of more information, I would say at Muneeb is Muneeb. That's my first name on Twitter. And we didn't get to talk about my company, which is called Trust Machines, that is building applications in the Bitcoin ecosystem, regardless of which layer it is, right? So if for payments, Lightning is obviously the best solution, we'll use Lightning. We're doing interesting things with DLCs, and obviously we use the Stacks layer as well, because we think that the smart contract capability that it brings is actually very useful. So my company is more about Bitcoin layers than about any particular Bitcoin layer out there. So you should go and check out Trust Machines. It's trustmachines.co, and we are hiring. We are even trying to get folks to hack on things like Lightning and Bitcoin itself. We have a business interest in seeing the entire stack succeed, right? Like, which includes the base layer, which includes kind of like the other Bitcoin layers that people are building.
Awesome. Yeah, sounds great. Everybody go build on Lightning then and build on the other layers as well. But thanks for coming on. Enjoyed it. We'll get this uploaded quickly.
All right. Thanks a lot.